Daily outlook into Friday, July 17th. All right. You see here yesterday was an expansion lower, right? So this expansion here confirms, in my opinion, the weekly profile, which is Wednesday half week, right? So Wednesday reversal. Monday trades lower, Tuesday trades higher, and Wednesday fills at the new week opening gap, as we saw. And yesterday expands lower. Okay, you can see that price yesterday created a low of the day at 50% here of the discount order block. This is something that we were anticipating because price came from 50%, failed, right, and then Thursday opened. It was only a matter of understanding if, right, the low of day here was going to form as an open low high close, or as it did, right, as an open high low close. Because we were talking about yesterday, if yesterday Thursday was going to trade lower, right, and New York would have found, say, support at these levels, then the weekly profile here would have likely became seek and destroy, right, and then we would anticipate it from there for Friday to trade higher. But I don't think that's the case anymore, right? I think that we have to assume that price will be trading lower. Okay, we'll be targeting further discount targets. Look, it doesn't mean that today can be an open low high close candle, right? This can still be the case, but what I'm saying is that we're likely not to see a new high of week, right? At most, I do believe that if the market will trade higher, right, say trades to 75% or the low here of the bullish order block and fails, right, creating some kind of open low high close profile, doing so, then probably going to close around 50% or 25% here of the bullish order block. But overall, I do see, right, the two main draws on liquidity for today being this being here the previous weekly low, and then from there you'll have the previous monthly low. Right now, say if coming in, right, because there is the possibility today that, right, price creates here a daily fair value gap, a daily SIBI. Obviously, it doesn't mean it will do it, right? Could come back and close like this, but if it does, it'll be pretty significant, right? Because it would close under 50% here of the daily bullish order block, and in that case, we would need to then look at the 3-month look back to identify our next discounted level, right? As the market here would have invalidated the last, well, not the last, but the discount PD rate here of the previous monthly range, right? And past the order block here, there's going to be nothing under for us to look at from the perspective of the previous monthly range. So we'd have to look at what's located inside of the range from a 3-month look back perspective, and I still want to cover it, right, just in case today displaces a low, okay? Okay, so if we analyze the 3-month look back range, obviously we know this is an expansion to a consolidation. And at 25% here, we still have, well, 50% of this weekly fair value gap here has been filled. Okay, but again, if today will be displacing the previous weekly low, trading under the previous monthly low, then in that case, I do believe that the range around, 25,800 down to 28,500 down to 28 could be an objective for today's daily profile, right? We'd be looking at a range of 2,000 to 4,000 ticks, all depending on the expansion. And again, these levels here can be useful not only for an open low high close bar, but also for, something that trades like this on the daily profile. Okay, so it could be some kind of New York reversal, okay, or swing to Z, or for all it matters, classic buy, right? price takes out the previous weekly low, rejects, right, and trades back higher in the range from there. Okay, so I do believe here that these levels will be important. Okay, so obviously, again, I'm paying attention to 50% here, already coming inside of New York, of the New York session. I want to be paying attention to, right, where price came from and how did it treat 50% of this order block. And if it's trading below it, again, I'm looking at 75% or the low here of the bullish order block. And if New York is trading past these levels already, then I want to be looking at the next available discount level, but from the perspective of a 3-month look back, which would be the weekly fair value gap. Okay, so these are all good draws on liquidity, discounted draw on liquidity. Okay, these would align with the idea of an open high low close profile. Now in case of a premium target, well, again, because of the context here, the context being the weekly profile, I have a hard time, right, assuming that price will trade very high up in the current weekly range that we have. I say, like last week, we had the context, we had the narrative to assume that price from discount was going to trade higher, simply because of the potential weekly profile here that was forming, being a Wednesday reversal. But right now it's the opposite, right? We're trading the last day of the week of a bearish reversal profile, weekly profile. Okay, so in terms of premium target, right, if price were to find a rejection either inside the range here of the bullish order block, this would likely be, say, by sweeping, right, taking out here the previous weekly low and then trading back higher. So these are the first level that I'll be paying attention to coming inside of New York. If New York is trading past these levels, then I want to be looking at the levels of the weekly inefficiency. And premium target, we said if it's going to find a rejection, 50%, 25%, but we can refine these levels on the lower time frame. Okay, 3-week look back, you can see that yesterday, right, created a high of day at the breaker located at 50%. Very, very, very nice trading, right, daily profile here. The classic sell, lots of opportunities inside of the range. The market yesterday has also closed below 50% of the discount 4-hour order block. Okay, so I'm going to be interested to see how price trades at the lows, right? Do we have an expansion or do we have a sweep at the lows? Okay, so that's the main thing I'm looking for. And obviously this is the last, this is the most discounted P rate that we have available in the range, right? So if you come inside New York and again, price is trading past this level, you need to refer to your daily levels. That would be 75, the low of the order block, and then again, the weekly inefficiency. In case price here were to find a rejection at the previous weekly low, right, and you're anticipating that price can trade higher back inside of the range, okay, so it can trade back to this wick here, the overall mitigation block, then it would, to me, it will be interesting to see if these levels here on a lower time frame perspective, right, so that would be the range, say, of about 29,000 to 29,200. If these price levels, okay, on a lower time frame perspective can be reclaimed, right? And if they do, well, then that could provide a trading opportunity to, right, to trade back inside the range. Again, even if price does this, I'm not assuming here a full-on reversal on Friday, but you know, I wouldn't mind trading a move back to 25 or, you know, inside the lower half of the current weekly profile here, right? Something like that. Okay. This is the 3-day look back. Price comes from swing to Z, right, which was preceded by an expansion. So consolidation, expansion, right? This here was a classic sell. Yesterday also was a classic sell. Right, so price comes from consolidation, expansion, retracement, expansion, right? And we closed here essentially at the lows. So since yesterday was a classic sell, I want to be using the levels that it left behind in the range here, just as we analyzed yesterday, right? And in fact, you can see that the market creating the high of day at the PDRA located at 50%, right, of Wednesday's range. And then on a lower time frame perspective, the market using this discount rejection block, so that was the discounted array from the range of Wednesday, using this as an area of reaccumulation to distribute price towards discount. Okay, whenever you have New York reversal, classic sells, classic buys, right? So expansion profiles. In that case, I don't really need to look, you know, at a 3-day look back perspective, or 3-period candle look back. Could be applied for any time frame. Simply using the latest expansion profile should be enough to give you a perspective of what is happening. All right. So we obviously have previous day's high, previous day's lows, previous daily high, previous daily low. In premium, a lot of PDRAs in here, right? We have bearish order block, bearish breaker, intermediate term high, fair value gap, right? So overall, since this fair value gap cuts through the breaker, the order block, and has an intermediate term high, that's the level that I'm going to be using. This level would only be beneficial to me, right, as a drawn liquidity for longs, right? I'm not assuming for price come all the way back here and creating the high of day and rejecting. Obviously, everything's possible, but I do believe that it's low probability. At 50% of the range, this is where price was a bit choppy here. In fact, essentially the opening range, an early 10 a.m., right, where it came from expansion, right, re-accumulated, and then later on in the session, so essentially from lunchtime, distributed lower again. So the levels are not so clear in here, right? At 50%, the range is pretty high resistance. I mean, if you look at this from the perspective of a 15-minute chart, I mean, there's too much happening in here, right? So I'm going to keep it simple, and since here 9 a.m. created an intermediate term high, right, rebalancing here a fair value gap, and this fair value gap happens to be next to 50%, right? I'm just going to be using this level. Now, obviously, you could use, the rejection block of the intermediate term high itself, or you could use the order block in here. I do think that both levels are valid. It can be that price, even if it will reverse or first trade higher, can create the high of day, right, simply from this order block. But this order block also formed right from here. We have a suspension block actually. Right, we have here the pre-market session had expanded lower, right, and had created a fair value gap, and this is a suspension block because you got a fair value gap in the middle, and you got a volume imbalance in premium, a volume imbalance in discount. Okay, so again, since the range was choppy here on 50% of the previous daily range, I would be inclined to use the fair value gap as my level of interest. And then, if I come inside the session and I see, say, that London rejected here and New York is opening at these levels, then in that case, I'll play around with it, right? I'll see, was this order block more sensitive, or was the rejection block more sensitive? Right, that's in the case that price trades higher but doesn't revisit the fair value gap, right? That's located at 50%. Right, even the 30-minute chart, I mean, it's a lot of up and down, so I don't want to overcomplicate it, right? I'll just use the fair value gap that's located in the range. And here in discount, so at 25%, I do like this here, right? It comes right at precisely at 25% of the previous day's range, right? Which obviously is a large wick, right? So a rejection block. but in the context of the structure and of the daily profile here, this is also a mitigation block, right? Price had traded higher, lower, higher, lower, but when it traded higher, it never made a new higher high above. I'd see here we had an intermediate term high in the London session. Okay, so I would personally consider this a mitigation block, but obviously, every large wick located inside of the range, no matter where it's located, obviously it's better to have a structure as to how you identify your levels. But I mean, if you were to grade all of these large wicks in here inside of the range, right, and see how price trades in them on the lower time frames, you'll see that price tends to be very sensitive, okay, to wicks, right? So you could grade this one and see price came back to 50%. You can even grade the one here of New York, the intermediate term high. You could grade this one and see how these levels traded into it. Maybe we can look down to a 15-minute chart, see if there's anything interesting. I mean, again, there's the wick here, tight range of order blocks around this level. But these order blocks, from a lower time frame perspective, form inside, right, of the rejection block, or at least around that range. So I'll be inclined to use this level right here. Okay, so we have a fair value gap order block breaker in premium. There's a range of a fair value gap intermediate term high order block located at 50%. And in discount of the range, we're looking at the range here of a mitigation block, okay? So again, price traded higher, lower, right? Fell to create a new higher high and then continue trading lower. So this is essentially classic support and resistance here. Okay, so these are all premium levels, obviously, as yesterday was a sell day. So, if I'm going to be approaching tomorrow's session, right, looking at this chart, I only have premium levels, right? So to be able to identify, either the draw on liquidity, okay, for shorts in case of an open high, low, close profile, or to get an understanding of, say, price were to start doing this, right, to get an understanding of where this happened inside of the range, okay? So I think that I'll be putting up the discounted levels here of the weekly fair value gap, right? And overall you can see that this range has proved to be sensitive, right? Right, so it wouldn't surprise me from a lower time frame perspective here, right? Say from the hourly chart, or going inside today's daily profile, that these quadrants should offer sensitivity again. Okay, so this I'll be approaching today. I got my premium levels and I got overall one big discounted level. And then obviously, right, as every day, you want to see, where has price traded, what was the reaction once it traded there, and overall, where is New York opening inside of the range? Is it opening inside of a discount array? Is it opening inside of a premium array? If it is opening inside a premium array, which premium array is it? Right? Is it the one in discount? Is it the one at 50%? Or is it the one at 75% of the range? And obviously, I'm saying that because, okay, say New York here were to open at 50% of the previous daily range, well, this can be a reason to anticipate choppy price action. Right, but say New York, right, were to open, say, around these levels, okay, then in that case, right, say here a low-hanging fruit target could be, for example, the premium array located at 25% of the previous daily range. That would be the safe target, right, for the long idea here. Okay, quick recap. We saw that Wednesday fell at the new week opening gap. Yesterday has expanded lower and has closed, right, has made a low of day at 50% of the daily bullish order block. So coming inside of New York, I'm going to be interested in seeing how price trades around these quadrants, right? Has it traded lower? If yes, what was the reaction? Was it lower time frame, say fair value gap or bounce price range here around the previous weekly low, or did price simply sweep the low, right, to trade higher? If there will be a displacement, then I'm looking at the range of the previous monthly low as a drawn liquidity. And if price is past that, then I'm looking at the range here of the weekly fair value gap. The 3-week look back, we saw that yesterday closed below 50% of the range of the discounted order block. This is the last available discounted PDRA inside of the 3-week look back range. So these levels, these quadrants remain important here from a lower time frame perspective. You know, could be you come inside the session, you see that price is doing something like this, right? So seeing price rejecting at 25%, right? And then you can start aligning other levels with it, such as the low of Monday here, which would be a mitigation block from the perspective of the 4-hour. Right, this is the type of stuff that can give you confidence to trade lower, or vice versa, right? If New York will trade lower and then reject, then you can be using these price levels, if around again 29,000 up to 29,500 as drawn liquidity. 3-day look back, we analyzed the phase of price delivery. We saw price come from accumulation, expansion, retracement, expansion. We're now opening in deep discount of the range. Okay, so well, we also analyzed here the previous daily range. We saw that this range left a fair value gap in premium. This level here would be my drawn liquidity if I'm anticipating a bullish daily profile and price has already, right, is already trading above the what is here a mitigation block at 25% of the previous daily range. You can say something like this, right? Then New York opens around these levels. I could anticipate a choppy New York session here. If it does something like this, then I would probably avoid trading it or wait for the shakeout. Ideally, the scenario that would happen, right, is, say, it could be a retracement inside of this level to trade higher. Well, yeah, I mean, that's the idea here. Ideally, a retracement inside this level to then trade higher, right? And then, so this level to me only useful as a draw liquidity is what I'm saying. If not, you got here a suspension block at 50% and a mitigation block at 25%. Right, and we identified that since we don't have here any discounted PDRAs from the perspective of the 3-day look back, and you know, essentially almost we probably won't have one soon also from the perspective of a 4-hour chart. We need to start using our daily and weekly levels, right, as our discount arrays. So in this case, I decided to select the weekly fair value gap that's located at 25% of the 3-month look back range. Now, if I see that this level is not offering sensitivity, then well, obviously I'll still be paying attention here to this level coming inside New York. The way that this level has been traded around should give me enough information, right, as to what the drawn liquidity will be. And overall, what's the profile of day. You could be using this also. Some standard deviations from yesterday's profile. I haven't checked, but maybe we can put up these standard deviations also. Right, and you can see that there's a confluence here of standard deviations that are around this would be the high of the bullish weekly fair value gap, right? And then all depending, right, on which market maker sell model you're looking at, right, you would be targeting 25% or 50% here of the weekly fair value gap in case of a sell day today, okay? Or, you know, again, if price does something like this, you can anticipate, right, because of the standard deviations, because of the key level, right, you could anticipate some kind of reversal profile back into the range. Okay, so I think that covers it. Good luck and good trading.